Hey, what's up, guys? Sultan Effects here from Forex Profit, and I am here with the long-awaited GBP trading strategy video. And this will be a simple strategy beginners can use to catch high risk reward trades in the market. And this will be a good strategy to really get your feet wet and to get into the swing of things when you're first introduced to the world of Forex. Um, I recommend beginners to try this out on their demo accounts, get used to it, and have a feel for, you know, what trading is all about, getting those executions in, and, overall just being somewhat profitable in the beginning of your career. So, we're going to just dive straight into this. Now, this strategy doesn't rely too much on how the market is trending. However, it would be helpful to identify how the market is trending. So we all know that markets trend. I'm just looking for the tool here. Yes, so we all understand that markets make significant highs and lows, breaking those highs, making higher highs, and that's how you identify your upwards trending markets. And for your downwards trending markets, lower lows, lower highs, retesting previous support levels, respecting it, trending downward, right? So it'll be helpful to identify that in your chart and be mindful we're on the daily time frame here. And we can see that clearly we're in an upwards trending market right here, right? Making that higher, higher low, higher low, making higher highs at the top here. It's very simple to identify. We don't have to dive too deep into that. But let's get straight into the strategy itself, right? So this strategy incorporates the use of identifying FVGs and simply sniping it, right? That's all you're going to be doing in this strategy here is sniping FVGs. So a cool indicator that I like to use in order to see FVGs in the market in case you may miss them is a indicator called FVG by Nephew Sam. Very good indicator, and it shows you the fair value gaps in the market, right? So this is a very useful indicator in case that you may miss them, because without it, let's just say like right down here, right? I may have missed this gap right here, right? And I you can see right now how the market dipped into this and you know that huge push upwards. So right now what we're going to do is turn on this indicator, and what we're going to do is just look for the gaps. It's as simple as that. What I will do is do a bar replay. Let's just pick a random spot. Let's go to the 4-hour time frame, right? And right here, sometimes the indicator may not indicate a gap right away. Right here, I could spot one, clear as that. And right now, you just wait. Just wait for that opportunity. Right? Boom. The indicator is showing. And it's as simple as, like right now, we just broke structure. We broke the support level right here, right? We could safely assume that we're in a downwards, or we're about to trend downwards in this market, right? Seeing that this is the overall direction that we're heading in, breaking these structures, going below this 50 SMA, and right here, what I would do is enter a short position in the center of this fair value gap. And I'd put my stop loss right above the gap, or I would find a previous zone of support to put my stop loss over. And it's as simple as that. So sometimes you could refine these gaps. So if I was to go on the 1 hour, right? Typically when you go on a lower time frame, you could see even more gaps on a lower time frame. But sometimes it's like this. Your lower time frames may not have the gaps that you're looking for, but overall though, right, there are only sellers in this market on this time frame, right? And we could see that there was no buyers in this market. So on this higher time frame, we'll go with that indicator. And what you always want to do is just make your trade a 1-to-1. So let's make this a 1-to-1 trade. Bang. And let's see what happens. We're heading back up. You're seeing another fair value gap. So I'm going to put my buy limit right here in the middle. And sometimes these stop losses could be quite big. So sometimes you want to refine these FEGs. Like right about here, I can spot it. Typically, my stop losses are always lower than 20. But for the sake of this video, we're just going to keep it like so. Let's make this also a 1-to-1. Let's continue to watch. I know you see a small one right here, but the small ones are quite negligible. We're reaching to our sell limit. Okay, there you go. So right here, we hit TP on this wick right here. Let's bring it back. Very clean within this FEG. Boom. Let's look at it on a lower time frame. And yeah, quick in and out trades. You could definitely use this strategy for small scalps. And again, it's just a matter of just sniping the FEGs. You can just do this all day, folks. Let's continue. Move this on this play market a little bit. And you could see this gap was created right here. You can see we got the half of this gap. However the half may be, somewhere around there. May have missed it a little bit, but that's okay. Stopped right below the gap, making your first TP at least a 1-to-1 trade. Somewhere around there. There you go. And yeah, you could see how you could get those very beautiful wick entries on the higher time frames. Like so. Let's just continue to look for more. Right, we got this FEG right here. Again, sometimes the indicator will not, show you one right away. And obviously this is the next one right on top here. Right. Look how price dips into it. And you see how we came right out of it. So your stop loss for this would be about 10 pips. And obviously, 1-to-1, completely smacked your TP, went about 33 pips in profit. And the thing about this is you may lose some. Let me put this back. You may lose some, but since your risk to reward is so high, whenever you do actually win, it completely recoups the losses. So, I would have a buy limit, 2 buy limits, however you would like to choose. Let's continue to watch. Dropping down. Let's remove these boxes here. And we have an FEG right here. Let me make sure my indicator is working. Or it's up. Yes, it's up. But that's fine. We can identify them. Let's get the half of this. Drag our stop loss right above the box, making this a 1-2-1 at least. Let's watch what happens. Got it on the wick. Smacks TP. Let's continue to watch it. I encourage all beginners to sign up for TradingView. Sign up for TradingView, and they have this cool feature called the bar replay. So you could just backtest your strategies. You know what I mean? You could log them, and it's just a very powerful tool to gauge if you're really ready to step into the markets and trade with actual cash. Here you go. We see the next FEG. I just know how to identify them without the indicator, but I still trade even with that indicator on because sometimes you just may miss them. Nobody's perfect. Stops right here. Let's make that about 10 pips. Let's be a bit generous. TP, at least a 1-2-1, whatever. Let's keep it at 11 pips. And we wait. We got stopped out, but that's fine. That's 1L. Let's continue to watch. And we're still on the time, the 4-hour time frame, mind you, right? Next FEG here, and you could refine these FEGs sometimes. Again, if you was to go on a lower time frame, you could see the actual FEGs within the higher time frames one. So you could remove that one, and you could actually put a sell limit right here on the smaller one. Get an even smaller stop loss. Let's keep it to 10. Let's keep this a 1-to-1. So barely missed it the first time. And these things typically happen. Sometimes you could be like a pipit to a pip off. But again, smart TP, that's fine. Right? Very simple strategy you could use. You could milk this all day, folks. Like seriously, all day. Let's do a few more. Got this small one right here. Make it enter a small short position. Let's do about 5.5, whatever. Small scalp. We missed it by a hair, but it's fine. Let's delete this. Next FEG zone right here. We're going to get the half of this FEG. Put our buy limit there. Put this underneath. Make this about 10 pips. Let's keep it to a 1-to-1. Right, got our entry, and we lost our trade. However, you're getting the gist of what we're doing here. Did it hit TP? Oh, it actually hit TP actually. Right here. Let's go down to the 30-minute. Did we? No, we didn't. However, you're catching the gist of what we're doing here. And it's a very, 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 very simple strategy that you can use. Now, we go in depth in our course as to why FEGs work and how to really incorporate institutional trading into your graph to really be even more profitable in these trades. So, for example, being able to spot your liquidity, understanding where the banks will take out your liquidity, which is right here, how the market will go upwards after taking out liquidity, hitting these FEGs that may lie on top here, spotting your order blocks that may lie, that may lie in areas like this. Another area of liquidity, watching how the market takes it out, refining these FEGs to figure out where's the most profitable or most likely, which ones are the most likely to give you the highest returns. And, we have all of these things in our course. But for the sake of this video, it's just a simple strategy, again, that you can use. So, for example, right? Let's say we were here, right? What you would look for is areas of liquidity. Very small one right here. And you're going to look for the FEG that lies above liquidity, and you're going to take that one, right? So let's just see if we get a good setup again. Let's see if we get a good setup. So we have an FEG right here, very small, very, very small. We lost this one. Let's remove this box here. Oh. Right? So you see, kind of consolidating down at this level, right? Getting a little area right here. We're going to take this FEG that lies above it. And again, this may not work all the time, but again, when it do, it will totally make up for your lost trades. And we simply just watch. Now, we did get the wick entry and we did get the retracement. However, we didn't smart TP. But again, when you do hit, you're getting like what? If you was to hold this trade, you're getting like, Jesus. That's 89. That's 89 pips off of about what? Let's even be generous because our stop loss wasn't even that high. Off of a 10 pip stop loss. That's a 1-to-8 risk to reward ratio, right? Right here, we lost 10, about 11 pips here, 5 pips here. But gosh, man, like the risk to reward is just so great. Um, you could just milk this strategy for as long as you want. We got these other FEGs up here. Let's just take this one. Why not? To end off the video. Put a stop loss right above here, 7.5. Screw it. Let's not even make it a 1-to-1. Let's make it a 20 pip stop loss. Take profit. Completely broke through it. However, again, your wins are going to make up for the losses. Let's take the ones down here. 7.2. Now, we hit stop loss, yes. But again, it's just a matter of refining these areas, because within one FEG, you could have multiple on even lower time frames. And yeah, man, it's just a very good, simple strategy you could use. Extremely high risk to reward. If you want to, you could just bottom line, just always keep it at 10 pips if you want. And yeah, that's the end of the video right here. We're going to be talking more on real institutional trading, more on market structure, and less gimmicky strategies, because every simple trading strategy that you may look at on YouTube incorporates some sort of institutional trading. And the reason why these trades may not be as profitable as you may like them is because it doesn't take many things into consideration. Like, for example, that last trade we lost that just shot up. There ought to be a reason for this, right? For example, let's look at market structure for a second here, right? So we're at a bank level right here, 1.38 thousand. We have a major bank level right here. And on this bank level, right, we have an institutional candle. We could use this institutional candle as an order block. Let's mark the half of this order block right here. Bing, right? We tapped into it. And though I don't want to give away too much of the sauce, but this is where banks are coming to mitigate their entry. They're going to hedge. And when they do that, it's going to give a which FEGs to respect. So these ones that we were seeing up here, we would know, hey, we shouldn't take these ones because we ought to see buying pressure into the market, right? So there's many things that come into play when you're trading and executing your trades in the market. However, this was a very small strategy. It's a cool strategy that you use, and you could be very profitable using it, when you're using it alongside other strategies you may have, more grounded strategies you may have, like institutional trading, to maximize your profit. So that's it for the video. This is Sultan Effects from Forex Profit, signing out. Until the next video.